Hi there, I'm Irk and this is my channel, Get Irked. In this episode, is Block still the cutting edge in fintech, or is it trying to fit a square peg into a round hole? In this episode, I wanted to talk about Block, the artist formerly known as Square, with the ticker symbol SQ. Jack Dorsey, the co-founder of Twitter, also founded Block with the intent of helping small business owners by providing them with credit card services. In the last few years, Block has opened up to retail customers with the Square Cash app, initially allowing customers to be able to pay one another with cash, but also now allowing them to invest in crypto and eventually stocks. Given the success and popularity of the fintech payment space, you might think there's nothing but blue skies ahead for Block. However, this isn't the case. In August of 2021, Block announced that it would be buying Afterpay, an Australian-based buy now, pay later service, and that it would be paying $29 billion in stock to purchase the company. At the time, buy now, pay later seemed like it was a good thesis, an alternative to credit card payments that had become quite popular. Initially, it was looking like buy now, pay later was going to be very successful, with numbers of customers paying on time, but it turns out that there are even more delinquent payments than was originally thought, and it's now no longer looking like it's going to be as good an option as it was originally. Accordingly, Block had a really rough end of the year in 2021, so we'll go into that in the charts. But first, we're going to take a look at Block's fundamentals. I'll show you the chart and buying plan of what I would do if I didn't hold a position, and then we'll go over my own position, which I've held since 2016. And yes, I'm going to interchange Square and Block repeatedly through this video because I'm used to calling this company Square, not Block. Block has a market cap of $74.5 billion, making it a decently sized company. And in its last earnings report, it reported $1 earnings per share, so the company is profitable and earning a decent amount of profit. However, this is one of those crazy red-hot overvalued stocks. Even after its dramatic sell-off, it still has a PE ratio of 162. And you'll remember, for high-growth tech stocks like Block, a PE ratio of 30 is considered overvalued. So when you're talking about 162, this isn't just a little overvalued, it is dramatically overvalued. And like I've said for other stocks that I hold like Nvidia, Block is one of those positions that has always been overvalued. You just kind of have to hold your nose and buy because it is going to be expensive no matter when you look at it. From here, let's take a look at Block on a chart. I could show you where the stock has come from and what I would do as a buying plan if I didn't already hold shares in the stock. Block came public at the end of 2015 with the name Square and started at $11.20 on the open market. In the past 5 years, Block has really taken off, reaching an all-time high in 2021 of $289.23. So like I normally do, let's start by drawing a Fibonacci retracement from the low in the pandemic to Block's all-time high in 2021 so that we can develop levels. You can see that this Fibonacci retracement is pretty accurate, as it did find support at 23.6%, then 38.2%, and even the 50% line. And in the past week, we've fallen through that 50% line and we're approaching the 61.8% retracement at $130. So if I was going to start a position, I'd probably start here at the close of this day where there was a rock solid support line at $143.31. From there, I would pull back and I'd probably skip the 61.8% retracement. As you can see, Square or Block really sells off when it sells off. And I'd look back here for some support right around these lines here and probably use this as my second buy at $117.55. From there, you can see that there was some support back here, so if you were feeling a little bit more aggressive, you could look at $98.93 for your next buy, followed by the 78.6% retracement, where you could see in the past that there is support underneath it down at $84.25. From there, I would continue to go lower, and you could see that we've got support back in the past right around here, and I might use $63.37 as my next buy. Or if I was feeling a little bit more aggressive, I might look around here too, where you could see we've had support in the past down here at $71.07. After that, I would continue even lower, and you could see we had a pretty strong pullback here to $52.31, followed by down here at $42.33. And then you've got the pandemic low at $32.33. This might seem like a pretty dramatic drastic plan since it does represent a nearly 90% sell-off from Block's high, but you have to remember that Block was incredibly overvalued going into this, and an extreme sell-off in light of current events is possible. And like I always say, I'd prefer to have money on the sidelines that I can't put to work rather than be all in and have it sell off to even lower levels. You may also notice that we have 8 different buy targets here, and that's because in Square's case, I wouldn't actually put a 50% allocation on right away. I'd probably stick to 25 to 30% and then save the remaining 70 to 75% for buys on the way down. Block is an incredibly volatile stock, and it's able to go up and down in ways that would surprise most people. And because of this, it's made me extremely cautious over the years. From here, let's take a look at my own position in Block. I'll show you where I started and where I am currently. I made my first buy in Block on August 5th of 2016 at $11.10. As I normally like to do, I started with a 50% allocation with the intent of buying more when Block sold off, but it never did. It was a high quality problem. Block just went higher from there. Before the pandemic sell-off started in March of 2020, I had a per share cost of negative $94.18 per share. A negative per share cost means that I pulled all the capital out of it and enough profit so that each share in my portfolio added $94.18 to the portfolio's bottom line in addition to the value of each share. As I mentioned earlier in the video, Block got hit particularly hard during the sell-off, selling off more than 60%. So I went to work with several buys. I made my last purchase on March 18th of 2020 at $34.52, the same day that Block bottomed down here at $32.33, with all of those buys raising my per share cost up to a negative $71.11 per share. Initially, a lot of analysts thought that Block would have a really hard time during the pandemic as small businesses were thought to be going out of business. Instead, when all of the small businesses started to offer services remotely, Block really took off, and I wasted no time taking profits on its run throughout 2020. The combined sales raised my per share cost to a negative $120.16, which was even better than where I was pre-pandemic. But Block wasn't done going up and continued even higher until it made its all-time high in 2021. Throughout 2021, you can see that Block fell into a tidal wave pattern, making consistent lows and highs and trading in a range throughout much of the year. What I like to do with a stock that does this is I like to buy when it starts to reach the low of the pattern and then take profits when it reaches the high of the pattern. I never sell my entire position. I'm always just selling small parts and then buying those small parts back, because you never know when the stock may actually break through the support and head to new lower lows. I made my last sale on August 2nd of 2021 at $280.25, which left me with a negative $134.02 per share cost. And it was at this point that the entire payment space really took a hit. You can see that I do follow my own discipline, buying on the way down with buys throughout November and December of last year, with my most recent buy here in the past week on January 4th of 2022. With my last buy at $152, all of the buys left me with a per share cost of negative $107.50. And from here, my next buy target is $132.50, which might sound like it's pretty low, but like I said earlier, Block has a tendency to really sell off, and it can surprise people before they capitulate and cause a bottom. Even if Square continues to sell off dramatically, I will never put my original capital back into the position. I will only put profits into this position, as I won't risk turning a winner into a loser. Block continues to remain one of my top 5 biggest holdings in my investments in play portfolio. And remember, you can always follow along for free at getirk.com, where I update my portfolios every week. Thank you for watching. Please hit like and subscribe, and I'll see you in the next video.